The three major movers in the market up until an ETF approval have been crypto funds, hedge funds, and leverage traders. They are the three class of investors who have really shifted the market dramatically. And if you look at the behavior of what's happened over the last 10 years with this, what's typically happened is those three cohorts, what they'd do is they'd invest in Bitcoin, Bitcoin would run up, and then they'd take some profits, they'd move it out the risk curve to Ethereum, that'd run up, then they'd move it out the risk curve to Solana, Cardano, and well, out to God knows what. Yeah. And so what would happen is they'd run out the risk curve. And what's going to be very interesting, and this is why I think it's going to be a sort of a line in the sand measured by a number of different things, is the institutional money coming to Bitcoin now with the ETFs is a much larger pool of capital than those three cohorts that I talked about previously.
Yeah.
And the other interesting thing about that is that the investments the institutions are making into the ETF are not going to bleed out the risk curve into the riskier assets in the crypto space. It's going into Bitcoin and it's going to stay in Bitcoin. It's not going to move out. So all of a sudden, this is very sticky money that goes in and it typically stays there for 5 years because no one who's investing 1% to 2% of their net assets into Bitcoin ever needs that money back.